everyone. My name is Zaki from OneSite Finance. I hope you're well. In this video, I would like to explain to you when you purchase a property, when will the deposit come out and which account it should come out from, what happened at settlement, and just a few tips here and there. Okay. This is just an example of the figures, which I'm going to walk it through. Say, for example, you purchase a property of 918,000 in Queensland. Obviously, you have to pay for the stamp duty, and every state will have different amount. In Queensland, there's a separate cost called transfer, and in New South Wales, for example, there's no transfer amount. So this is related to the state. And the other cost, we normally put aside around $5,000. On a more expensive property, we might budget for more. This will cover your solicitor conveyancing fees, government registration, settlement adjustments, inspections, and the bank upfront fee maybe. My job is to do a rough calculation to make sure that you have enough funds to complete. Your solicitor or conveyancer will do an exact amount on the breakdown of the cost closer to settlement. If you do pay a buyer's agent, for example, that's another cost we have to build in. Now, your contribution, every state is different, and this is for non-auction, okay? So generally, when you pay the deposit, if there is a cooling off and not an auction, you have to put an initial deposit. In New South Wales, is 0.25%. In other states, it could be different, like $1,000 or $5,000 initial deposit to lock in the purchase. And then at the end of the cooling off period, or when the finance clause is due, depending on your contract, then you have to give the rest of the deposit. Okay. Now, say in this example, the total deposit is $30,000. In New South Wales, though, you can put 5% deposit at the end of the cooling off or 10%. So it has to be negotiated. I noticed in other states, the numbers could actually vary. It could be like 10,000, 30,000. So it's not an exact 5 or 10 like New South Wales. So we have to check the contract. Say in this example, the loan is 80% of the property value or price. It means that for settlement, you still have to contribute the rest of your deposit. We call it the shortfall for settlement. And depending on the bank that you go, that you basically get the mortgage. The bigger banks like ING, CBA, Westpac, and everything, generally we ask the client to create a transaction account with that bank. It could be your offset account, or you can just create an everyday transaction with them. And it's easier if you do that, because then you can transfer. In this case, your shortfall is around 217,720. Normally, I will just round it up to, in this example, is 218. And then you can transfer that money from your own saving account currently to the new bank transaction account. Okay. And we need to ensure the funds that's required to complete the settlement are in there at least 3 working days prior to settlement. Technically, you don't need to have that funds until 1 working days before settlement, but I always tell my clients 3 days because we don't want to leave things last minute. You need to check your current bank, the internet banking limit, because if you have to transfer a large amount, if your limit is only 10,000, it's going to take you forever. Okay. You can always also go to the branch for your current saving account provider, and then like some banks charge $35 or something to do in one hit. I would suggest though, if you do need to transfer money from one bank account to another bank account, just do a test. Just transfer like $10 or something, just to make sure you have that connection, and then you can do the rest closer to settlement. Okay. Now, the important thing is the contribution that you are going to transfer the money from has to be from the right account. So if you organize an equity release from your existing property that will be used towards the contribution towards this new purchase, make sure it comes from that account, not from your home loan offset, your owner occupied offset, okay? Because that will affect the tax deduction later on. Insurance. So generally, if you buy a house, you really need to get a building insurance. We will ask you to send us the certificate of currency of the building insurance, noting your new bank as the mortgagee or the interested party. If you purchase a strata title, whether it's a unit or a townhouse or a villa, the bigger banks like Westpac, CBA, and all that, they don't really ask for the certificate of currency of the building, but the smaller banks will do. So you might want to ask your solicitor to get that document from the strata corporation because we have to give it to the bank. So the other thing that you need to do is, well, it's advisable for you to do is to do a final inspection of the property before settlement. This is to ensure that the property still looks exactly the same um, from the time that you look at the property, maybe like 6, 8, 10 weeks ago. The thing is that you need to make sure that the house is clean, there's no big hole in the wall. Or we had a really cheeky story where the vendor changed the dishwasher to a cheaper brand before settlement. And then we had also a story where they took out all the blinds where it was supposed to be included in the purchase. So just check, do the final inspection. We will basically making sure that we talk to the solicitor, a conveyancer, and check that the numbers are correct. If you do get emails from the conveyancer or solicitor, if you want us to double check the figures, just forward it to us. We can roughly calculate and check to make sure that what our numbers is in sync with that calculation. So for example, if we tell you the shortfall is 218 and your conveyancer say, oh, it's only 200,000, that's a big difference. And we have to double check that, that the numbers are correct. I hope that helps in terms of explaining what happened to the whole purchase when you pay the deposit and what happened at settlement. If you have any questions, just let us know. Thank you.